Taking a look at today's interest rate markets, let's look at the 10-year note futures as they're experiencing some selling pressure. After initially opening higher, we are now looking at the 10-year note futures under a little bit of pressure here in the afternoon. 126.14 is where the futures market is. And after 3 days of rallies, and initially we did see the 10-year note futures pushing up to basically 2.5-week highs earlier in the session, some readjustment, I guess, and some shifting of dynamics in the afternoon pushed the 10-year note futures lower. And I think when you look at a couple of the main drivers today, a lot certainly has to do with the geopolitical concerns in the market, reacting to different narratives and themes coming out of those negotiations and things that are taking place from across the globe. And now initially we did see some selling pressure in the equity markets, and they rallied all the way back to unchanged, and some selling pressure, and now we're seeing them bouncing off those lows. We're also seeing the treasury markets reacting to some of those themes as well. And as I mentioned, we did see the 10-year note futures higher, but now we're seeing them ticking lower here on the session. And also, I have to say that the other thing that's driving, I think, the interest rate environment today is certainly the Fed speak that continues to roll out as we move towards that March meeting. There's a lot of discussions as to how the Fed's going to move, how much and when, and also what other steps they may take. And today I think we got a little bit more hawkish information coming from different Fed speakers, and I think that's another driving factor when you look at the price action within the Treasury markets. Because really, when you look at today's action, we're seeing the 10-year note yield bumping up a little bit, as I mentioned, basically 2 basis points. We're looking at 195 basis points in the 10-year note yield, up from 193. But really, the bigger picture today, I think, is the shifting yield curve. We're seeing the short end of the curve really selling off hard today, with the 1 years through the 7 years really experiencing some pretty significant selling pressure. And then it flattens out, and really the 30-year is basically unchanged on the day. So shifting of dynamics here as far as duration expectations, potentially impacted by the Fed message today. And we are seeing the 10-year note futures selling off slightly, yields up about 2 basis points, but the entire yield curve is flattening today.